in general as a psychological trader, and part of trading is understanding human emotion and understanding that when the whole crowd, when every single person is rushing into an asset, that's usually the mark of a top. And you saw this, I mean, we saw this in 2007 with the housing market when Time Magazine featured like the flipper, the home flipper on their front page. It's exactly the same thing. I mean, when you have the mom and pop saying, hey, this is so easy, I can't believe how much money I'm making, it's usually the end of the move. And then you look at the charts and you understand the massive move that has gone on, the double top that we saw in Bitcoin, all the factors out there. To me, it was one of those no-brainer scenarios. Plus, let's not forget that by November, when Bitcoin was topping, we knew the Fed was going to start raising rates, right? We already saw inflation spiking, and everyone was saying, oh, like, listen, inflation's spiking, so Bitcoin has to go higher. I would dare say that people, this is not even close to the feeling when there's full out panic, right?
Okay.
And I think this would be seen, and I would say to you is like, you know, is anyone really that worried? I mean, it's not fun to see your investment accounts down, but is anyone proverbially jumping out the window yet? No one's doing that. There's not this fear because we've been addicted to the Federal Reserve coming in all the time and just saying, oh, you know, yeah, we're down 20, 30%, but the Fed will come out and save the day. What's going to happen when the Fed doesn't do that? And that's going to be where the markets really panic.
Bitcoin has been dropping for a while now, yet many people still ask why it didn't crash as much as before. When crashes from companies like FTX are scarier than the others that happened before, like Celsius or Terra Luna. Why is Bitcoin holding on its own? There could be something else in the crypto markets preventing prices from crashing faster. In today's video, Gareth Soloway, founder of VerifiedInvestingEducation.com and chief market strategist of VerifiedInvestingCrypto.com, will bring a ton of value to the table. He will make another Bitcoin price prediction of when we will see the ultimate bottom and why things may change soon, and Bitcoin will finally start flipping its direction. So take a seat and pay close attention until the end. This video has a ton of value for you. First, how is the macro framework looking before we understand what's happening with crypto? What is Gareth seeing?
You have inflation, then the Fed's going to basically push us into a recession that they can't bail us out. And remember, since 2009, the Fed has just been printing us out of every trouble. Whether it was, you remember obviously 2009, the collapse in the banking sector, all the bailouts that went on and the quantitative easing that was started. And then that basically continued. Then in 2018, we saw them say, okay, we got to start raising rates. The market threw this big hissy fit, dropped 20% in a matter of 6 weeks. They actually reversed and started cutting rates again, and then it takes you into COVID, and we know what happened during the COVID crisis with them printing even more money, and that was the massive printing of money that we saw. And so it's really everything. It's the inflation numbers, it's the economy that's going to be slowing, and it's also just the overall kind of wear and tear that it does on the consumer. So I do think at least a minimum of 10 to 15 years. I want to show you some really cool charts here. So
take a look at the charts.
Here's the Dow Jones Industrial Average, and I'm going to show you guys why I'm showing this chart. So take a look at what we have here. You have this sort of pattern, which is basically this M pattern top in 1915 to looks like right around 1921. All right, and again, you're going to say, well, why the heck is Gareth going back to this period? And then look at the run that the Dow Jones Industrial Average had for the next, basically in the roaring 20s to obviously the Great Depression, the collapse, the crash of 29. And so if you look at that, and now let's just go right to the S&P 500. And this is where it gets crazy, right? So what we can see is that same sort of pattern formation from the dot-com bubble, the dot-com collapse, the real estate bubble, the real estate collapse, and then look at the massive run we've had. Now, a lot of people would say, okay, that's just a chart. It's just, it's a coincidence. But what you have to do is you have to delve deeper. And this is where I love being a student of history. And what you do is you look at what was going on in the early 1900s, 1915, 1920s. And what was happening was cars were becoming more and more the norm. Electricity was becoming more and more the norm. Well, what did that give us? It gave the consumer light at night. They could go out at night. They could go to speakeasies, spend money. They could drive more than, I mean, before cars, you were limited to the distance you could go if you wanted to go to the general store, right? And so you had all these things coming into play that created a consumer that could get out there and spend money. Now, if we go to the current times in the S&P 500, in the dot-com era, what do we know happened? The internet emerged. Right? And the internet basically gave, do you shop on Amazon?
I do.
Well, so do I. And think about that. Now you didn't even have to leave your house to shop and spend money. And so there's these coordinated factors that make me think that we're very similar to what happened in the 19s, teens to the 20s, leading into the into the Great Depression. And I don't want to, it's hard for me not to jump to that conclusion, but I am very concerned that we could see something like that occur.
But are we still in a bear market, or is there something else we can do other than suffering?
There's always opportunities out there. In fact, bear markets give you one of the best opportunities to buy. I think we're actually absolutely in a bear market. In fact, I think 2023 is going to be even worse than 2022 in terms of downside in the stock market. But there are places to go, right? There's gold. I mean, gold, again, great performing asset. It's a great, if you look at back and compare the 70s and the early 80s in gold, it's an amazing replication of what we're seeing now, yet we just haven't started the big move up in gold that should be coming. So there's lots of places to go. And I would say this is that, in general, long-term investors have had their field day since the Fed began bailing the markets out. It's now becoming more of a trader's market where you buy, but then you can't just say, hey, I'm going to tuck this away for 20 years. You want to actually just take the profits and run and then look to rebuy on the next dip.
So, Gareth Soloway says 2023 will be a worse year for stocks, even though there are always opportunities to profit in bull or bear markets. And why does Gareth thinks we didn't get a worse crash if everything seems to be falling apart?
So I would dare say that people, this is not even close to the feeling when there's full out panic, right?
Okay.
And I think this would be seen. And I would say to you is like, is anyone really that worried? I mean, it's not fun to see your investment accounts down, but is anyone proverbially jumping out the window yet? No one's doing that. There's not this fear because we've been addicted to the Federal Reserve coming in all the time and just saying, we're down 20, 30%, but the Fed will come out and save the day. What's going to happen when the Fed doesn't do that? And that's going to be where the markets really panic.
Now, if you don't remember or don't know, Gareth was calling a 70% drop in Bitcoin in 2021, and that prediction was correct. For the past months, he was also calling that Bitcoin was coming back to 20K, and these were his reasons.
In general, as a psychological trader, and part of trading is understanding human emotion and understanding that when the whole crowd, when every single person is rushing into an asset, that's usually the mark of a top. And you saw this, we saw this in 2007 with the housing market when Time Magazine featured like the flipper, the home flipper on their front page. It's exactly the same thing. When you have the mom and pop saying, hey, this is so easy, I can't believe how much money I'm making, it's usually the end of the move. And then you look at the charts and you understand the massive move that has gone on, the double top that we saw in Bitcoin, all the factors out there. To me, it was one of those no-brainer scenarios. Plus, let's not forget that by November, when Bitcoin was topping, we knew the Fed was going to start raising rates, right? We already saw inflation spiking, and everyone was saying, listen, inflation's spiking, so Bitcoin has to go higher. But the essence of it is inflation spiking, Bitcoin was already factoring that in. Now it had to factor in the major tightening that the Fed was going to bring in. And remember, there was so much money that had been thrown into the Bitcoin market, from checks going to Americans from the government, from quantitative easing, from all the stimulus. People were home. They weren't driving to work, so they were saving on gas money. They weren't taking vacations, so they had extra money. So all that money was going into crypto or stocks. Now, all of a sudden, you get to a point where the Fed starts sucking out that liquidity, and there's really no other way for any assets to continue up, and we've seen that here.
With that in mind and all the recent events, why hasn't Bitcoin dropped another 70% right away?
So as bearish as I was when we were at 65 to 69,000, I would say I'm lukewarm now on Bitcoin.
Okay.
It doesn't mean I think the bottom is in, but you're right. Let's take a look at the chart of Bitcoin. This is something I want to show you guys.
Yeah.
So here we have, this is the drop on the Terra Luna collapse. And we dropped from about 31,000 and change down to about 17 and change. And so that drop was about 40+%. Now, if you look at the collapse of FTX, Bitcoin only dropped 25%. And so you could argue that FTX was a much bigger blow up in terms of institutional money being involved and kind of the earthquake that it caused, yet Bitcoin dropped less. And so to me, I take that as a signal that says, okay, it's not the end yet, but we're getting there. And so a couple of the analysis points. So number one, I looked at the comparisons of FTX's blow up and the Lehman Brothers collapse in '08, noticing again, Lehman was a bank, it collapsed. An exchange, FTX, kind of like a bank, but in crypto, it collapsed. Now, how long did the S&P 500 take to bottom after Lehman Brothers? And the answer is it took about 6 months. So then extrapolate that out and say, okay, in 6 months from now, we might be seeing the bottom in Bitcoin. Human emotion, you could say, oh, well, that's stocks, this is crypto. But the answer is it's all the same. And the reason it's the same is because humans, you and me, we're the buyers and sellers. And does your emotion change? Does my emotion change? No, greed and fear. It's what rules the market. So you can really extrapolate that out. And the last thing I'll say is the S&P, when Lehman collapsed, fell another 45% from that point, from that collapse, before it bottomed in March '09. In that case, we should see Bitcoin fall approximately 45% more from approximately that, breakdown level around 18,000 and change. To me, that gives me a target just below 10,000. And keep in mind that max pain is caused when even numbers are broken. You'll see a ton of stops run at 10,000. That could be the bottom when it breaks into the 9,000.
And finally, Bitcoin has been correlated with the NASDAQ and stocks. But things are changing. What does Gareth think about this?
I think Bitcoin is starting to get into that mode of being between the two, right? So I think what you're going to see, and this goes with the predictions, right, for 2023, where the NASDAQ and the S&P are going to continue down. But what I'm saying is Bitcoin's going to actually bottom out and actually start to turn up in 2023. So that means it has to decouple from risk assets. And the key to this is going to be regulation. As much as everyone hated the idea of regulation in crypto, now we see an FTX scenario and everyone's saying, all right, well, you need some transparency. You need audits. You need to see the books on these players. There has to be rules where they can't take customer funds and put it in other places. And I think that's going to be the key that really starts to trigger Bitcoin's next move up, is when you get regulation, institutions will finally start to come back to invest in Bitcoin.
Will 2023 be the year of Bitcoin? What do you think? Let us know in the comments below. And if you enjoyed this video, please leave a like and subscribe for more. Thanks.